Hello guys, today I want us to look at the Nzdcad because we had a setup previously. I don't know, I'm trying to remove this notification, but seems it is under maintenance, so of course I can't remove it. So there's something about this pair that I want us to look at, and we're gonna look at it from a higher time frame, which is a monthly time frame. So from the monthly time frame, we're going to look at the behavior of this pair and see if you want to short or to buy or sell this pair, which areas have higher probabilities and where will you prefer to take your position from? So by understanding the trend of the market, by understanding the direction and high probability areas, it makes it, gives it a high probability for you to either wait or enter a position. So I just wanted to remove the watermark here first. And when I look at it from the previous record, as you can see, it was initially bearish way back. I like going back into more data back in the days to see actually what was happening. And I love using the 6-month period of time for me just to get to see things clearly. So looking at this, you can actually see the bigger picture that this pair is trying to push higher after failing to break the main low and close below it. You can see this was the low here. And on this low, we got to sweep this low. So the range of price is between this low and, okay, and here, and this high. That's where we are. So that's the range of price. But we cannot use this information like to call out a zone in the market. So we are going to look at it using our concept. So I'll go to the monthly time frame and just follow the trend of the market, get to see what was happening. So from this zone, you can see this was the main high that pushed the structure, the market to the downside. And this is my inducement level. Yeah, this is my inducement level. And as you can see, press taking out this area of inducement. This was our lower low. So if we break below and close below this zone, that is when we get a new breakout structure. So as you can see, that is not a breakout structure, but actually a sweep of the major low, which is a liquidity. So once we have that sweep there, and according to this market structure, we can see this is just an order flow up here, but from around this zone, I can see some institutional activities from as low as this area, around this zone, and also around here, you can see something here, right? So the market might react to any of these zones. I see this was just a small reaction and happened to push higher. And again here, we can see something here, price hitting that level there. Because you can see some indecisive candles and decisive candles and then explosive candles. So you can tell that zone was also influenced by institutional activities and the price pushed to this low here. So from here, price started pumping to the upside. But what we are looking at is to see this market go lower and break that structure. So since the market was supposed to break this structure, what has happening here is that the market has been pushing to the upside, and definitely if we get break above this high, then this will be the market intending to push higher. the upside, it will be intending to go higher. But look at this, what happened here. What happened here, this was a sweep of liquidity, the sweep of this high here. Since this high was taken out as a liquidity level, it was taken out, and the market was trying to do it to push to the downside, and probably if it's going to push to the downside, then we need a high probability zone that we are likely to hit. And for us to see that zone, as we can see from where the market is, let's see, where do we have a zone that has been hit heavily? Okay, nothing really good here, except if this market could have hit this, at least this zone. This could have been something that is more better. That this is the only zone that's unmitigated and around this zone here. But I don't like looking at the zone from the left. I'm looking at it because of the way this market structure looks like. And if I have to follow the current price of the market, we have taken out the liquidity. The major trend was bearish, so we're supposed to see the market going lower, breaking that structure. So if we have that, then probably what is happening here is something like this. See, price creating the internal structures. And from there, we're seeing this, yeah? We're really insisting to push lower until we break that structure, and maybe we get a bigger move to the upside. So this is where we are going to put our attention at, around this zone. And we're going to look into this market structure while the target heading towards where the market is heading. So with this, I like drop into a different lower time frame, which is a weekly time frame. And if I'm looking at this market from the weekly time frame, I can actually see how the market has been pushing lower and mitigating some institutional areas. But the most important point, we're going to put in our all-time concept, SMC, take out liquidity, and this is our low here. This is our high low. This is our break of structure here, lower low. And again, when you look at this zone, first pullback, second that pushes the price to the downside. This is our just normal inducement. This is our liquidity zone. That was a very nice supply zone up there. So this will be our inducement here. If this is the inducement, then automatically this is our lower low. Then most people will go for this area as a supply zone. You can see this will act as your SMT. SMT is the smart money trap, whereby the market violates the zone and it goes higher. Take out what we call engineering liquidity. This is just an engineering liquidity, and the main supply zone that we're supposed to use is here. Supply zone that is a zone above the current price of the market. Right? So we're taking out this zone and mitigating that supply. We'll be looking forward to see this market push lower and break this structure here, right? And break this structure here. Once we break this structure, then our protected high is here, because what is happening is this market just went high like that and pushed the price away. So these are major high. So once we have that level, we can look at this again and see where's a normal inducement. Look at this. This is the first heavy pullback, and this is a high that has pushed the price. These are some minor inducement here, but the major liquidity level is here, because this is the main high that has pushed the price to the downside. And most of the time, people prefer using this supply zone here to short the price to the downside. So let's see. This is the inducement here. This is the inducement, and this is the lower low here. And what you're going to look at, most people will like taking their supply to those areas whereby we have a zone that has pushed the price away. We call it an order block. But when you look at this order block was of low probability because it also consists of a level that has pushed the price away, like that. And above it, there's also what we call liquidity. So price has to collect all the liquidity above it, and this zone also end up failing, right? End up failing. Once that level has been taken out, what you can see here is that the price pushed lower. And again, you get a new breakout structure here. Getting this new breakout structure here, we're going to look at these are major high because this is where the price, excuse, this is the price where the market has pushed away from that particular zone. So when you look at this, we're going to look at this one again as a, here we don't have a valid pullback because most people want to look at this. And if you look at this area, we don't have a valid pullback here. So we can look at this one. This is the first pullback, the second price reach here. So this was the main pullback that was supposed to be taken out. And here, this is just an internal candle. It means nothing. So unless price breaks this low and creates a new pullback, we don't have any pullback. So you can see here, price went lower. This is the level that I look at as my inducement to be taken out. So this area is going to be my inducement here. This is going to be my inducement zone. When this inducement zone is taken out, then this is my yellow. Then according to the weekly market structure, if by any chance I close above this, because this will be my extreme supply, if by any chance I close above this zone, then automatically I'm going to get what we call a change of character. And this will show me that the price wants to push higher. But again, look at this here. I think everything is mitigated. And if we look at this zone here, if you understand the way liquidity works, this is what we get here, low, a high. This is a high that has pushed the price to this particular low. At some point, this high also contains liquidity. The price might either sweep this level as a liquidity, a way of taking out liquidity and switching to the downside. So that's how you should also look at that zone. So whenever you have that level, also know that above it, there's one type of, I don't know, there's always a smaller liquidity above it. So it's not that when you have a level price away, it's very clean, contain liquidity. And if we look at our supply zone here, I see price hitting this zone, and you can see that high was taken out because that very high also contain what? Liquidity. So that's why you should never put your stop loss just above your supply zone, immediate on your supply zone, always above it, whether it's a supply zone or a demand zone. So that's what we get there, liquidity taken out, and we look forward to see the market breaking this structure to the downside. So if we get to break this structure to the downside, then where's our high? Our major high is around this zone because price went to that level and went to the downside, and we broke that structure. Now, once you have broken that structure, what are we looking at again? We want to look at level of liquidity. And you can see from this particular high, I'm not going to tap into these smaller liquidity zones because you can see price went higher, went lower, but this was like a supply zone, which has already been mitigated because it had swept liquidity. And look here, you can see around this zone. You can see here, there's this sweep of liquidity, and this was also another zone acting as a supply zone that has already been mitigated. So I'll not be looking forward to use this level as internal structure, but I want to look at a zone whereby we have the high, this is a low, this is a high, this is a new low, this is a high, then the new low, What is this? Look at this. Price pushed the downside. So for me, I know that the immediate inducement is all this one. But if I have to go for the main liquidity zone, I like looking for zones like this being taken out. Zone that pushed this price up. This is my engineering liquidity because at the extreme, I got something like that. A supply zone there. Supplies on there. So I'll want to see if price can push higher, then well and good. But if it doesn't, then you have to understand that the market will move. It has its own way of moving. So when you look at around this zone, everything has been mitigated. Look at this candle mitigation, mitigation. Yeah, we have this mitigation. So the only zone that was still not mitigated was around this zone, right? So price mitigating this zone, to me, it was like still to look like a zone with low probability, so I'll not be comfortable to maybe take positions here. But you can see price taps on that level and it's pushing to the downside. So probably once the inducement is taken out, this will be the low that I will be looking forward to see this level being what? Being broken, right? This level being broken. So if you're looking forward to see this level being broken, then automatically what are we seeing here? We look at from this low, yeah. So price actually pushed higher, took out this high, but I wish could have taken out even something like this, taking out that high and push lower, but the price will always do what it wants. So what we can see here, at least some form of liquidity were taken out. Right, taken out, and this was an internal structure, an internal low, and probably we'll want to see this market again push lower and break this internal BOS. So our now attention on this market structure is between this high and this low. But again, this one has a low probability because here we have some liquidity still lying around this zone. So still I'll prefer this is a zone that I should always look at when it comes to this pair. A zone that I should not forget because this market might decide to do what? To take out this liquidity, returns to, for example, something like this, take out liquidity, returns to any supplies on mitigate, pushes to that extreme level before price hitting the major low down there. So here, I'm on the weekly time frame, and if I'm gonna just pick a level, a zone here, I'm gonna see this area. Okay, this one is in an internal structure, so of course it doesn't hold a lot of weight unless the main candle was taken out, which is this high of this green candle. Let me zoom in a little bit more clear. If that candle they have it is taken out, then I'm good. So this high we can see it is taken out. And once this one is taken out, then a form of liquidity is taken out. So probably my candle of interest is this one. Right? This will be my candle of interest from a weekly point of view. So let me go to daily and try to refine the zone. And we can see when you come to daily, you see this is the area of volatility. And if we look at, we must have two zones here. So we have the low of the body of that candle, and still here again we have a liquidity sweep down this zone. So when you have this, then automatically I'm going to use this as also my decisional supply zone. Yeah, so these are the areas I'm looking at. And remember the setup I had shared earlier. had a share on a setup on this, and I noticed that this levels of low probability, very, very low probability, and this is just a form of trendline liquidity here. So these are my two supply zone. Two supply zones here. So I'm watching this price. I really want to see the rally towards these areas before I could show the price. So let's see something. Let's try to maneuver around some different time frame, maybe the 80 hours, 12 hours, 80 hours, and see if we have the same pictures. Mostly I want to see around this extreme area. Yeah, so when you look at this zone, so these are different chart whereby I want to look at this market. Initially, we were using the daily time frame where we had this zone and another zone was above around here, around this area. So we are going to have these two areas of interest. If we get to see the market pushing towards uh, these areas, then that's for me areas with the high probability. Because initially I had a supply zone here on a lower time frame. I think that was a 4 hours time frame. And at this 4 hours time frame, I noticed that this zone, to me, it was of low probability because there's something I told you guys that actually I told my private community members that make sure that you have a zone that is originating from a higher time frame, all right? Because if you have your zone that you only see 24 hours and you can't see this zone originating from a higher time frame, then you might get trapped. And the reason was this: I was looking at this market, seeing this sweep of liquidity here, seeing mitigation of this area, and I was seeing this break of structure here as well, right? There's a break of structure here. There's this break of structure here. So look at this zone, of course, this will be my extreme, and you can see the price is really trying to react from these areas. But to me, in fact, when I go to 2 hours time frame, I can see really price trying to look good and really, really interesting from that area. And if you are selling here, man, like you'll be probably targeting this low here. But I feel like this is just a liquidity zone that I don't want to participate in. Let me do this and I remove this and show you something. These areas to me are liquidity traps. I'm not comfortable. Okay, the concept is showing me something to like. If you trade here, you can really trade here, but I really find it difficult because we can see supply zone and everything. But the moment I switch to, let me even use the 12 hours time frame, what do you get to see here? You notice that you don't have any zone here. So this means that if you're going to look at any zone here using the lower time frame, then that zone has a lower probability because that zone is not originating from a higher time frame. And the price is really trying to reject here. But I'll only be comfortable if I hit this level and trade. So if the price will hit that zone, then this will be a good setup. So let's see, let's do something different here. Let's do something different here. So here to my extreme supply zone, this this zone here, I want to refine it a little bit more up to around here, right? So those are my areas of interest that I'm looking at, and probably let's see how the market's gonna play out at the end of the week. Those guys, I'll see you around. Make sure that you follow, you subscribe, you share. So this, the end of it.